You have been warned. Do not buy another stock until you know where the bottom is. Hey, watch this week's session. I'm showing you where I expect to hit the bottom. Let's jump into it right now. For this week is that the market is in correction. We're going to answer a question today. Never trade the first rally attempt after a market goes into correction. We're going to explain why. And then we've got some great stocks to look at. We're going to be jumping directly into the stocks that we're going to be looking at. And so we have lots of good stuff to cover. We've got one of the things we're going to be doing new starting today is we're going to be actually reducing the index review time to 2 indexes, because basically not very many people were really interested in the Russell. I will cover that, of course, with our premium members because we like to trade the Russell's TNA. But they're probably interested in the S&P and they're interested in the Nasdaq, so we'll cover those. And so that opens up some time for us to take a look at other stocks that are setting up for swing trades. And so we're really excited about that. Anil's got a couple of great stocks today. I've got a stock and a leverage ETF to take a look at because I want to make sure that we start including leverage ETFs with the stocks and picks and all that kind of stuff. So again, welcome aboard. Here's where we're sitting. So Anil, has your system been taking you out of positions to help you protect your capital?
I got stopped out on many items. And as I said, on my triple screen system, S&P 500, Nasdaq, Dow, Russell, everything has flashed a triple screen signal about a week ago. Dow just joined it yesterday.
Okay, now that's a triple screen signal to sell?
Yes.
Okay. So that utilizing that. Yeah, one of the things that we noticed is when the market went into uptrend under pressure, I switch and for protection to start only doing half positions. In other words, if I buy anything new, it's only going to be a half position. And try to keep the stops tight, and that way it helps protect capital. Another good thing you can do is just stand out of the way. As you can see, we took a little bit of a hit this past week, down about 2% from where we were the week before. And there's where we were the week before, and here's where we were. Here's where we are right now, as we can see, still up 20% for the year. However, one of the things I will highlight, the Russell has slipped back down into a bear territory. The other indexes, while remaining very positive for the year, especially the Nasdaq, notice that we still have not recovered the high, and this was back in, I think, 2021, has not regained that high. We're not in a bear market, but we clearly, the uptrend is wavering, if you will, is what I would like to call it. So before we get over into our stock picks, let's go ahead and take a look at the indexes. And I'm going to start here with the S&P. Now I'm going to leave up the weekly and the monthly charts. So what are we seeing with the S&P? As you can see, the S&P is coming back, retesting down at that level right there. That was an old breakout level. And so one of the things that I highlighted earlier on is don't, never trade the first rally attempt. And if you do trade the first rally attempt, make sure that you go in with a small position rather than a large position, because trying to time the bottom typically never works. What we're looking for is, in reality, because price actions are now fallen below the 50, the 8 and the 20 have a bearish cross to the downside. I'm looking for a pullback up into these moving averages, failure on that rally attempt, and then continue to proceed to the downside. So with the tone of the market currently, I'm more interested in trying to wait for a downside trade than an upside trade. The markets, today, we can fool ourselves into thinking, aha, we're getting a reversal signal, which it's not really a reversal signal, but it is bouncing off support, and try to fool ourselves into saying, okay, that's the bottom. And in reality, we don't know if that's the bottom or not. So on the S&P, check out what's going on. The momentum indicators, TSI, down at the lower reversal level, we would expect that to predict a bounce, which it possibly could. The weekly chart is crossed over to the downside and looks like it wants to continue falling. And as Anil said a little bit earlier, that he has gotten on his triple screen system sell signals on S&P, the Dow, or the Dow just happened, and the Nasdaq. So what I'm looking at is what is the momentum doing, and the momentum cycle on the weekly chart is pointing down. And one of the things that I really like to do is just take a straight line down from here, and that gives me an estimate of when the market may turn around. And here's what I would be looking at with that. Just find that where that low is right there. And as you can see, that low right there equates to approximately October 9th. That also coincides with October 9th, coincides when the markets tend to start their rally going into the end of the year. So interesting, Anil, that's setting up that way. Let's go over to the Nasdaq. Nasdaq showing that it is pulling down into a magic fib box. This fib box here is from this low to that high Fibonacci. So it's pulling down into the magic fib box. It has an uptrend line that may wind up being a support factor, but it also, as you can see, moving averages crossing to the downside. We have a failure and a close, several closes below the 50-day moving average. Daily chart, momentum looks like it wants to shift to the upside. Weekly chart looks like momentum wants to continue to push down. And what will be very telling towards the end of the month, it would not surprise me towards the end of the month, Anil, to see the monthly TSI cross to the downside to reflect the weakness that tends to happen in the September timeframe. Am I looking to buy the indexes right now? No, I do not have a bullish reversal signal on the daily charts, and I have out of sync parameters for the momentum indicators to the downside. So Anil, what's your thoughts?
I got a question. Would you buy the inverse at this point, or the time is gone?
I would not buy the inverse at this point. What I would be looking for is this rally attempt. Use the rally attempt simply because I now have a bearish setup here. Use the rally attempt to then buy the inverse. Now, I'll show you an example of that on SQQQ, and we can do something very similar to SQQQ. If I draw this line across these bottoms here, approximately. So I'd be looking for, if I'm looking for the stack to pull up into this downtrend line, I would be looking for SQQQ, and that's a great question, to pull into this uptrend line. So now we can just be patient, wait for that to happen, and so that's the way I would be looking to trade, because SQQ looks like it's more prone to be going up. So trade the dip, buy the dip on SQQ, dipping back into the uptrend line or between the 8 and the 20-day moving average. Great question. Thank you.
Gotcha. Thank you very much.
Does that help?
Yeah.
Okay, I love this comment by Mark Douglas. Simplicity is the key to brilliance in trading. The more complicated your methodology, the more room there is for error. I truly believe that. I know when I was a researcher at Cal, one of the things I was always constantly trying to do is eliminate the number of variables that we had to deal with when we were doing studies, and I became very good at eliminating variables. But the more variables we can eliminate, the more, I think, the more simplistic the solution. And I think it was Da Vinci who said, there's a certain sophistication about simplicity or something along that line. So, hey, secrets for this week: define your beliefs, goals, and ability to execute. If you're challenged with basically, not having time to be able to actually execute, you need to basically take a look at rolling back or carving down your goals and objectives. Because if you're expecting to, let's say, trade 5 stocks or 10 stocks during the week, but you're also fully employed doing whatever, for a job, you may not have the time luxury to be able to spend the time putting in, for the ability to execute. So that would be a time issue of being able to execute. Other things that affect our ability to execute is, do we have the capital to execute? So know your limitations, both in time and ability. Maybe your ability isn't up to the point where you can be, let's say, be trading options or trading leverage ETFs. And so, like I like to say, is just keep it simple and always look for ways to simplify your trading. If you haven't found a setup within an hour of when you first start looking for one on the weekend, stop looking. And then be aware, write out your beliefs, goals, and constraints, because we all have them, no matter if you are working for a living, not working for a living. I mean, I work for a living doing what I do in the market. And the other time I spend a lot of time doing marriage mentoring with my wife. We are marriage mentors. And so place constraints on what I can do in the trading arena. That's my trading tip for this week, Anil.
Very good. Excellent.
Okay. Now, tomorrow, guys, there is a session, and this is the IBD National Virtual Meetup. You can register for it. What this is, it's going to be 9 traders who will be basically providing their trading strategies, literally a priceless experience. It is free. And so I encourage you, jump on that. I will be one of the presenters on that. I'm really, pleased to have been included with this group. The other presenters are just absolutely phenomenal, and I'll be bringing up the rear or whatever. That's the only ad we have for today. It's a priceless experience.
Can I say one more thing?
Yes, you can.
On Thursday, 24th of August, we have a Delaware IBD meetup celebrating 10 years of our inception. So come join us if you can.
Cool. And I will get the link to that and put that out also. So with that, let's go ahead and jump in. It is time now let's take a look at our stocks and ETFs, and we will bounce back and forth between Anil's pick and my pick. Anil's kicked off his picks with this INSW, right? Now, what is INSW?
That is, I did not know the stock until yesterday. I was preparing my list. It's in oil and gas, transportation, pipeline industry.
Oh, okay.
And looking very strong on MarketSmith as well as on the check-in system that I follow. It's very bullish. So okay, that's the reason I picked it.
Now I was noticed on it when you gave it to me, the volume, a little bit under 250,000 shares today, but on average about 642. So that's good. Are you buying now, Anil? Or are you?
I haven't bought it yet. I might buy it today.
And so earnings are out of the way, folks. Had a nice little spike up on earnings coming back into the moving average. And just, when anything breaks out like this, you can wait for a pullback back into the 20-day moving average, or you can also take a look and say, if it's going to ride the 8-day moving average, you can also place a potential order in those areas also to ride it to the upside. So that's, I like it. I don't know if it has any options or not. My pick, I can't believe I'm doing this. I cannot believe I am doing this pick, is this one. Alphabet basically has kind of been resurrected from the dead, if you will, but it also has some really good SMR, A, accumulation distribution, B, 1.1 on the up-down ratio, and a 98 on the comp. I like to utilize this as a great teaching technique because here's what happened. Price action today pulled back. Now, this was on our watch list for our autopilot trading premium members. And what we did is we provided to them on Sunday of this past week for a pullback back into approximately this level right here. And that we were sitting there waiting to ambush this one if price action got down to that area. That was determined by looking to your left and seeing all of this information over here. And look at all that, just a perfect past high breakout area. And we came back and retested that. And now we're bouncing to the upside. I like Google to continue on up. It may put in a cup and handle. There's a cup, may slide down here and provide a handle, or it may just push on up a little bit higher and then put in a handle over here. But I like Google to the upside, Anil. I think it's recovered and it's getting stronger from a fundamental standpoint. So that's a good thing.
Yeah, and I'm looking at my triple screen system, and you got daily, weekly, and monthly signals are active, buy signals.
Oh, excellent. Now, so your next one is GBX. This is a railroad.
It's a transportation equipment and manufacturing, it says. Doing pretty good. It has come down a bit after shooting up. So I like it.
Now this was on your list a couple of weeks ago. Did you do a buy on this one?
I probably didn't. No, I did not. Definitely did not.
Okay.
I selected something else at that time.
Okay. Well, it looks like I said, it looks pretty good. It is coming back in great volume on the breakout here after earnings, and it's just coming back into the breakout zone for a bounce the way I see it. So I like it. It is like a lot of the other items that we're looking at. The momentum on the dailies looks like it wants to shift up and turn around. However, the weekly momentums look like they want to basically do a little bit deeper pullback. And that would make sense to want to pull back, I would say, back to the breakout area, approximate breakout zone, which isn't too far away. I mean, we're a couple of bucks away from that. That's what I'm seeing.
Yep.
Okay, I'm going to be throwing out these leverage ETFs for folks who want to take advantage of them. And the leverage ETF that I'm going to throw out this week is Nugget. Now, I'm not suggesting buying Nugget where it's at right now because I don't think it's done going down. But I think with every additional leg down, now this is the gold miners leverage ETF. With every push down, it is getting closer to this level of support over here at about the $24 all the way down to about $20 and some change. Part of the reason what I'm looking for is on a reversal back up to the upside. I would expect if we start building up the right-hand side of another move to the upside, this could turn into a horizontal trading zone. From the low to the high is about 150%. So is that something am I interested in trying to capture at least a little bit of it? You betcha. And so right now I'm moving it onto my radar to watch it on a continuous basis. That's what I'm doing right now, Anil. You're probably, I don't know, is your triple screen saying this is a sell?
Yep.
Yep. Okay. And I agree with that wholeheartedly. But I'm looking out. A couple of things that transpire is oftentimes gold rallies going into the end of the year. Partly that's due to gifting of gold in India, actually. And so we'll see if the seasonality kicks in and pushes it back up. But right now, I'm not buying it. But it is definitely on my radar for a pretty big move. Okay, Anil, anything else?
That is about all.
Okay, well, with that, guys, that basically does it for the day. I want to say thank you so much for joining us. Looking forward to seeing you. Hope you can join us for tomorrow. So until next week, looking forward to seeing you then. So, Anil, thank you. And aloha and God bless.